Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is June 24th, 2020, 9 o'clock in the morning. Economic news for the overnight session was pretty light, just a European IFO business climate at 4 a.m. And then this morning, 9 a.m., S&B quarterly bulletin out of the Swiss franc. And then HPI out of the US dollar. At 10:30, we're going to have crude oil inventories, which will affect crude oil, obviously. And then this evening, trade balance out of the New Zealand dollar at 6:45. Tomorrow in the morning, an hour before the bell, is going to be our bigger news events for the day. It's going to be core durable goods orders, the final GDP, and the unemployment claims for the U.S. market. So that's going to be the most impactful event here, probably the rest of the week. It's just a couple of different orange star news events. We didn't have any red star news events for the U.S. markets here this week. So let's take a look and just talk about what we've run into. Actually, when we don't have a lot of news events, technicals are less likely to get blown out. So Monday, we had this, it's actually Monday the 15th of June, we had this swing low here. It's pretty massive. That swing low, the projection from that swing low targets 33.72. So our higher time frame target is bullish above 28.62. 33.72 is that target. Now, we rallied off of those levels on Monday. We were waiting for a full 50% retracement. We got that on Sunday night at the open. We rallied all the way back to the top of the range. This level, this 31.40, continues to be a rejection zone. And then we came down into what is the full 50% retracement from the lows of the week on Monday to high. This is a pretty significant support level for us to trade here. It is a 30.86, and in fact, in the overnight session, we had a 50% retracement short that led us down into that level at, it was 5 a.m., 4 and 5 a.m. that traded. Once again, some of the best entries trading in the overnight session. Now, we have an hourly leg start. I will be looking at any halfway back from the low of the day to high. Any halfway back from the low of the day to high. There is a technical counter trend sequence, but I don't think it's going to hold. This market just over and over continues to prove that the bulls are in charge and will most likely rotate back to the top side. Our higher time frame profit target based on the 50% retracement that traded in the overnight session is going to be up at 31.74. Moving on to the Dow. Our higher time frame Dow target based on the support that traded on the 15th of June is all the way up at 29,099. 29,099. That's going to put us pretty close to the all-time high. Now, the Dow has come out of a 50% retracement long from the June 15th low. We traded that on Sunday night. We swung all the way back here to the top side of the range. You can see this 26,300 zone continues to just be where we're topping out, and then we had a full halfway back long trade in the overnight session, just like the S&P 500. That level was 25,764, and our upside target from there is 26,544. Now, as far as a support level here, I would give this a little room if you are taking a long sequence down here. Now, the full 50% retracement long from the overnight low to high, that is going to line up within 15 points of the actual halfway back. So just this entire zone here, it's not like there's a specific level, but this entire zone here is going to be support first thing in the morning. Now, if we do continue to rotate higher, I would expect some resistance if we don't get a pullback. Obviously, we see some consolidation on this chart around the 26,000 area, so just be aware of that. We have a leg start down. I'm just going to mark this leg start down here, and if we rotate up there, that would be like a good profit taking spot for me on the day, right up at that 26,000 area. It's about let's see, it's like 180 points from here. Moving on to the NASDAQ. Now, this setup here in the NASDAQ is a little different. Obviously, the NASDAQ is the most aggressively bullish market, but we had this extension from 96.23 to high. This traded once, it traded twice. We completed our targets last Friday, and then we came into a same anchor new low on Sunday, completed the targets on Tuesday, and then that same anchor new high hasn't yet traded. At any point this week, if we come down, this would be an incredible level where I think we'd get like a fake out lower. So right now it's about a 10,040. So we'd fake out lower and then possibly rip higher. Instead, what is held so far, and we will, this is just in hindsight, but basically the overnight low of Tuesday to high, so the halfway back from the prior day low to high, has come into its support level. So I would look at that on a second test only, the 10,134, because that would just be where the current bottom of the range is. So that 10,134 is the more aggressive level of support, but really this is the zone. If we can get down here, or when we get down here, that extension will I'm thinking will provide an incredible reaction. So that's the 10,040, and maybe we'll see it later this week, maybe we won't. Moving on now to oil, which I'm looking at. We had a 50% retracement long. Let me go to an hourly chart. This is a 4 hour. We had a 50% retracement long from what was the low of Friday to high. Okay, that reacted, failed to hit targets, came back into its support at the end of the day yesterday, and then broke. Because we've broken that long setup, we do have the possibility of a short setup. In that short setup, right now, we actually have a short setup here in oil for the first time in a while. Is going to line up with the overnight highs. It's 40.5, okay? It's 40.5, and that lines up with the previous daily high that goes back to June 7th, and its downside target is going to line up with the higher time frame. So I am looking at this 40.5 area as a resistance level here today, and I am looking at the 38.52 as the support level. Let me show you how I'm coming up with this 38.52. Okay, so if you go back to when the rally began in oil on the 15th. June 15th just seemed to be a day where a lot of the markets turned around. You'll notice in this entire video I keep mentioning June 15th as a level that really began some sequences. But basically that was our lows in oil of that week. And then we began riding higher. And this is why you have to pay attention to the smaller time frame. We have an extension that begins out of that low. And you might not hit that first trade, but once you see the reaction to the 50, we get the completion of that target. You see that same anchor new high, boom, there's a reaction to that 50, we get the completion of that target. You see a same anchor new high. Once again, there's clearly a program, for whatever reason, I do not know, but these programs attach themselves to the same levels over and over. We complete that target. What's the high right now? It's actually up at that negative 61. So that same anchor to the new high here, that's that 50% retracement. It also lines up with a good consolidation, just general support on the chart. If you can see, that's where we spent some time on Tuesday, Wednesday, Thursday of last week. So I'm looking at that. It's a 38. Let me get the exact level. I think this draws slightly off and do not want to be off. So it's a 38.48. So 40.50 on the high as resistance, previous highs, halfway backs after a trend break, and the 30.48 on the downside as support. Moving on to the USDJPY. Yesterday we were going into a breakdown in the morning. Now we had this, it was like literally a perfect 50% retracement short, and its negative 61 was a 106.11. We went all the way down to 106.11 by about 11 o'clock yesterday. That negative 61 hits. There was also a higher time frame target about 6 pips below, and it produced a counter trend rally so far that's lasted. Now, you can make the argument that there's a halfway back from Tuesday's high to low, and that has technically pierced. That is technically pierced. So there is the possibility of two things here. One, the 50% retracement long from lows is a valid setup. It lines up with the overnight low or the low of the day, as well as just a consolidation area. Or if we continue to rally higher at the up into 106.85, that 106.85 is a 50% retracement short from Tuesday's high to low, and lines up with what we broke down from. So I'm looking at the 106.85 and the 106.43. It's a whatever trades first situation. Moving on to the Aussie dollar, which has staged a rally from Monday. Now, that Monday low to high is what held and completed its targets on the prior day. Now, you could argue for that same low to high, but I'm taking the more conservative long setup here and using last week's lows on the 15th once again and drawing them to the most recent high. This is still a consolidation. We've run back up into the top of the range, and this 68.75 support level is closer to the bottom of the range for me. So I'm watching this 68.75 support level here in the AUDUSD. For the euro broke a series. Yesterday we had extensions in the euro. We had extensions, and we have broken those extensions, and we ended up setting up in a 50% retracement short that ran to profit target, and then we had a reaction to our second halfway back. So that we are just in between a halfway back short and a potential full 50% retracement long. The short targets are below the long, so I would like to actually see this target complete at the 112.49 before anticipating any long. Right now I don't have much to do unless we would have to either see a break above 131.70s or a break below 125.50. Otherwise I'm hands off the euro. For the GBPUSD, we are sitting inside of this 50% retracement short, and this is the next measure move down. We very well may continue lower here. Now, yesterday we had this halfway back to target, and then we had our next measured move to target. Okay, that target completed on the high. That low to high has failed. We retested resistance. It does look like we're going to roll over here. What I'm interested in is to see if this first short completes. Okay, we're right up on this resistance level at the 125.10s. We're right up on it in the Great Britain Pound USD. Moving on to the USDCAD. The USDCAD came out of its support, dipped into lows, and then produced a rally. The next halfway back from the low of yesterday to high is a 135.40. I'm looking at the 135.40s here today, and that's the only level outside of if we got up to the 136.17 first. There's no news on the table, so I don't think we're going to see too crazy of an exaggerated move, but the 136.17 level would be resistance if we traded it first. So I'm going to set an alert up there and just an alert down here. Even though the Thinkorswim alerts have not been very effective, they're not going through. And then moving on to gold. Gold has just traded this extension that I was looking for on Tuesday. We had the halfway back trade Monday, the 15th of June 15th, right? And then we ran all the way through profit targets. Now, when we run through profit targets like this, we have the possibility of beginning extensions. This extension is at 17.75 half, and it's basically, we're 3 points above that level right now, but it lines up with the highs we broke out of on Monday and Tuesday, so there's a little bit of confluence there. The higher time frame target is 18.05, but let's talk about where we are in this chart. New high at 2020 printed in the overnight session. So this is very crucial that this extension holds. If we just make a new high of 2020 and then fail the next extension, that's a failed breakout. That's right, that's a failed breakout. So the longs are, it's very important we hold these longs here, otherwise we're most likely coming all the way back down from the halfway back of the 15th to high. So either we hold above this 1770 or we're going to rotate back to 1751. Hold above 1770 or rotate back to 1751. And then silver, same thing. Silver had a wild morning. This candle is the biggest candle we've seen. It just totally wiped out all of these long setups. And what we ran into was the original halfway back long. So we had this halfway back long that traded on Tuesday, Friday of last week, rotated into targets. We had our next measured move on Tuesday in the overnight session. That failed to complete its profit target. It did. And we just fell all the way back down this morning. There was a massive stop run at 8 o'clock in the morning, wiped out all of these longs. And now we can probably begin rotating back higher. The only thing to watch for here And there's so much volatility in these moves, but we had an initial reaction and then we actually already took out that swing high. So a 50% retracement from low to high here, and I would even just use this most recent low, is going to be a valid setup into the entry of the trend. And it's at 1763.5 right now, 1763.5. But a very volatile morning. And look at these two 5-minute candles. This was just them washing stops. And usually when you have that just stop wash, it's pretty easy to get right back above those levels. I don't want to call it manipulation, but that's basically what I think it is. And usually when you see that, it's just stops getting taken out, and then it's a very, very fast reversal. So that'll be what I'm looking into here today. I do think watching this pound out of this high is interesting. We do have some reversals in the currencies, and then whether or not these indexes hold their halfway back longs at the open is going to be very, very crucial. And then oil inventory report here today. So whatever support or resistance level trades first, I think is going to have a pretty decent reaction. But that's going to wrap up my morning trade plan. If you enjoyed this content, please give this video a thumbs up. Helps increase my engagement on my YouTube, makes it worth all the while. Everybody, have a wonderful day. If you're interested in learning more about trading, check out all of the links I have below. And I'll see you guys in my trade room today. Take care.